I just did a video. I just made a video on MPW, Medical Properties Trust. I need to edit the video and I'll upload it probably tomorrow. But I saw it went up a lot yesterday. It was 398 on 326, and then it jumped up to 475 the following day. If you follow the stock, I'm sure you know why. But if you don't follow the stock, I'll tell you why. So the reason, well, just to rewind a little bit, the stock dropped a lot for a while now. So it was over $10 in July 2023. And you can see its decline down to $5 by January 2024, which is pretty significant, 50%. But that's over a pretty long time frame, right? But the real crash was $5 January 4th. The following day, it was $3.50. So what is that, like a 35% drop? So if you follow the stock, you know their one big tenant, Steward Healthcare, has been having a lot of financial difficulties, and they kind of stopped paying their rent. And 20% of the revenue for this company, for MPT, is from Steward. Steward is a pretty big hospital facility. They have a lot of hospitals in the United States. I think Massachusetts is a big. Florida's number one. They have 9 facilities in Florida, 8 in Massachusetts, 7 in Texas, Arkansas, Louisiana, Utah, 6 in Arizona, 4 in Ohio, Pennsylvania. So they have 34 properties with this company, MPT. That's significant. The value of those properties is $3.3 billion. And the quarterly rent for third quarter was $62 million. So that's a big hit for a company like this. So the way it works, this is a REIT, MPT, Medical Properties Trust. So a REIT is a stock that trades in the open market. And the purpose of a REIT is to buy real estate. And then they lease out the real estate to different companies. You have different kinds of REITs. You have mortgage REITs. This is more of a medical REIT. They do mainly hospitals and long-term care centers. So they buy real estate and lease out those properties to companies that are in the medical field. And just this one tenant, I'm sure they have other tenants that have struggled, because who hasn't struggled since COVID? But this one tenant has really struggled and was on the verge of bankruptcy. Now, the reason the stock went up, what was it, 18, almost 19% on Wednesday, was they're looking to sell their facilities to United Health. So it says Steward Healthcare has struck a deal to divest, which is kind of like to get rid of, to sell off its physician network to United Health's Optum segment. So this is not like a done deal. There's hurdles. You have to get approval from various agencies. But it should go through. I don't see why it wouldn't. But the exact terms of the deal were not disclosed. But considering, I posted in your Discord about how Bitcoin mining stocks were a buy because they are pretty much a big data center. That was over a year ago, I believe. Wow, nice. Yeah, Discord, I haven't been using Discord that much because it's just so much spam, and I just didn't like it. I try to use it, but it wasn't really. YouTube is better. But yeah, that's a good call. I did buy $100 of Bitcoin, so that's worth $230 right now. But I don't really invest in crypto. Okay, but considering Stewart you mentioned Stewart has not been paying its rent to Medical Properties Trust as it has grappled with financial hardship in recent quarters. And coupled with the fact Stewart previously represented as much as 20% of Medical Properties Trust total revenue. Yeah, it definitely got overrun. MPT shares are rallying given the prospect that Stewart could catch up on its past due obligations. And this company, Medical Properties Trust, they pay a pretty nice dividend because REITs generally pay a high dividend. But they did cut their dividend by 50% to 15 cents, but they're still paying a 20% dividend yield. I mean, look at this 18.6% because the stock went up. Because as the stock goes up, the yield goes down. So the stock was a lot lower a few days ago. So the yield was like 21, 22%, but still a 19% yield. So either they're going to cut their dividend or the stock will go up. One of those two things will happen because you can't really pay a 19% yield for like that long of a time, maybe a few quarters. But the only reason a yield looks so high, sometimes you see yields like at 50% or 100%. It's just a timing thing. The stock, it's because the stock crashed. Like when a stock goes down a lot, then it looks like the yield is great, but the company will not pay as big of a dividend if they're in financial hardship. REITs must distribute at least 90% of the taxable income to shareholders as dividends. That is true. That's why they pay high dividends. REITs, MLPs, and BDCs have to pay at least 90% of their earnings and dividends. So it makes it hard for a company, because that's why Meta never paid a dividend. They did mention they will start paying a dividend, but that's pretty much the reason technology companies usually don't pay dividends, is that they want to keep the money in-house to grow the business. Berkshire Hathaway has never paid a dividend because he feels he can get a better return than we can. So he's managing our money. Stock crash because they are overexposed to a medical company in trouble who can't pay the rent. Exactly. 20% of their revenue is Stewart, who was getting close to bankruptcy because they stopped paying rent. They were in a lot of trouble. So that's positive news, but it might not last. I think there is a good chance the deal will go through, but I don't know if the new entity, United Health, is going to take over the properties, if they're going to be required to pay all the back rent. They might be required, but I'm sure they're going to try to negotiate a deal because, I mean, they have all the leverage. MPT is really at the mercy of these companies. It's kind of like when you have a mortgage on your home, the bank doesn't want you to go bankrupt, because if you go bankrupt and you can't pay the mortgage back, the bank doesn't want to take your home. They're not in the business to take a home and resell it. They don't want to do that. They want you to keep paying the mortgage. Just like a company with debt, they don't want to have to deal with trying to go to court and get the money from the company. They just want them to pay. So that's why a lot of times they'll renegotiate the terms of the debt just to keep them paying and keep them a going entity. But this is a few months ago, October 2023. It was on the company's website. They just mentioned the investments for Stewart. They talk about their EBITDA arm rent coverage. So it looks good. I mean, it's above 1. So they can cover their rent according to this. But I guess there's a difference between EBITDA and I think they're just upside down in their mortgage. Like they owe a lot more than the property's worth, and then so they're not so they're having a hard time just paying the bill. So when you look at stuff like this, it looks like they have plenty of cash flow to cover, because as long as you're a coverage of 1, you can cover your payment. So they have a coverage of 2.7. So then why don't they just pay it if they're covered? Bullshit earnings. Yeah, that's what Charlie Munger calls it. Dividend is from when they were $20 a share, right? Because the dividend doesn't change; it changes each quarter, right? But the stock price changes each day, so that's why the yield is coming down a lot. But you should try to read the fine print, even though it could be a little confusing trying to read the fine print. But that's how you get most of the information. Primary steward and separate Massachusetts partnership master lease. South Florida portfolio. Long-term investments in steward operations. So MPT has these investments in steward, because that's what a REIT does. A REIT kind of finances these hospitals or these medical companies. So if you have like a like a medical practice of some sort, and you want to expand, I mean, you could go to a bank and get funding, but a REIT is another alternative. So you go to a REIT and you get funding from them, but you have to give a cut of your earnings to the REIT. But that's the only way to scale. It's hard to scale just by using cash flows from your business. So you have to lever up. So let's see. This is how much MPT has: almost $500 million of debt out to steward. So $363 million is an investment loan. So it's secured by 90% of equity of steward, which is garbage, right? Because the equity is worthless if the company goes bankrupt. One-way cross equals loan cannot trigger default of leases. Loan provides for PIK-like initial 4% return plus 37% of the increase of the value of the steward over 7 years. So these are kind of like the, I guess, the returns. They get a 4% return on the loan. So I guess like interest, they charge interest of 4%. And plus, if the value of the properties goes up, they can get an extra 37% on the increase in the value of the properties. Unfortunately, a lot of commercial properties are upside down. They're worth less than a mortgage. It's kind of like if you have a home, if you get a mortgage, if you get a loan for $300,000 from the bank to buy a $350,000 home, then 3 years later, if your home is worth $250,000, you're upside down. And a lot of people just walk away from those situations. They just give the key to the bank and say, I'm done, because you can't even sell your property. Because if you owe $300,000 on your home and the home is worth $250,000, the only way you can sell the home is you have to come up with $50,000 to give to the bank in addition to the sale of the home. So it's cheaper just to walk away. MPT converted some of the rent owed into shares in steward. Otherwise, they would have been forced by insurance to evict as debt got too high. So this passive equity stake of $126 million in steward. This is a 10% share in the equity value of steward, which is not worth anything. The collateral that's backing the loan is subordinated to lease and all creditors, but carries some preferential rights to steward. So it's not really worth too much, these loans. MPT's steward investments. So as Steward grows its business over the years, they they get funding from MPT. Maybe they want to build another wing in their facility. Maybe they want to add more beds or convert one of the sections of their building into another segment of the hospital. So they just need funding, or maybe they just need to pay their bills, whatever it is. So MPT gave all this funding. And you could see that so in 2018, they gave $10 million to Stewart, and it tells you what Stewart did with it. Not a lot of family use cannabis products, though. Okay, so Stewart funded the pharmacy improvement project. So I guess they were trying to add a pharmacy to one of their locations. So they use that $10 million to kind of build out the pharmacy. Because if you ever go into a hospital, like I use Kaiser, and it's usually most Kaisers are very big buildings with a lot of like different doctors inside it. But on the ground floor is a pharmacy. So you can go to the pharmacy and get your prescription filled. It's like an all-in-one place. Instead of going to the doctor and then going to CVS to get your, prescription, to get your medication. Then 13.5 million in 2019. This was startup costs related to Stewart stepping to operate Florence. Stepping in. So it looks like they acquired a hospital in Arizona, in Florence, Arizona. So Stewart needed 13.5 million to get that hospital. And this, in theory, benefits MPT because they're giving Stewart 13.5 million, and Stewart has to pay back the loan. Hopefully, they'll just like any business, they have to they get patients and charge those patients insurance, and hopefully they make a profit. That's what it's really about, right? Making a profit. And then 32 million facilitated sale of Easton Hospital. MPT continues to earn cash interest identical to lease terms. So they're getting paid interest on the 32 million. So 14 million was repaid of this. So only 18 million is outstanding. There's 150 million. 100 million was repaid. 50 million is outstanding. This is for general working capital. So like day-to-day working capital to maintain the business or possibly fund their payables or whatever it is. Another working capital loan, 50 million working capital, including covering ongoing Norwood Hospital. But the thing is, once you lend to somebody, it's like if you lend to a friend, it's like after you lend to them like 5-6 times, it's like you're so deep into lending with them. If you already gave them like $10,000, they're like, just give me another $500 and I'll give you your entire 10,000 back. I just need 500 so I won't default and I'll be able to like get the business going. Like it just seems like it's a never ending thing. You just have to cut off your friend at some point. Please do update AQST. They just closed that big offering and got the FDA approval. A longtime cannabis user with a very well-connected dealer. Illegal market, obviously. Well, cannabis was legalized in Germany, and Germany is a pretty big country. That's a big deal. I mean, it's not the U.S. U.S. is the richest country. We spend so much money. That's why any company wants to be in the United States, because we just have so much money we spend. We're in lots of debt. But being in Germany is not a bad thing because it really helps these cannabis companies. Of course, if you're a U.S. cannabis company, it's not as beneficial. I mean, if you're a European cannabis company, it's a lot easier to sell in Germany. If you're U.S., there's some hoops you have to jump through. but it's still, it does open up the market. Germany's marijuana legalization bill is officially signed into law and will take effect on Monday. So a bill to legalize marijuana nationwide in Germany has officially been. I mean, what are the big cannabis companies? Cannabis stocks. What's the biggest cannabis stock? Kronos, Canopy, Aurora. I've heard of these. What's the big one? Is it Aurora is 200. They're so small. Kronos, Canopy. $1 billion. That's not too small. Okay, so 1 billion is a decent size. Who's investing in cannabis? The thing you want to do, you want to invest in these stocks before the news comes out, because once the news comes out, it's already baked in, and it's going to probably come down because people are going to take their gains. But I remember there was when Biden got elected, I remember cannabis stocks, not that it made any difference, but all cannabis stocks shot up. I think it was around the end of 2020, because he officially, because the election is on a leap year, right? This year is an election. It's the last quarter of 2024. So the last quarter of 2020 was when we found out who was the president. And they don't actually enter office until what, January, February the following year? But it's on. So we found out around here who would be president, and all cannabis stocks shot up. So this was like as low as $5, and then it went to 12. So it went up more than doubled. But you knew it was going to come down. I mean, cannabis stocks are just not good investments. At least tobacco stocks, they're not great investments either, but at least there's not so much downside. So it got up to 12, and you really had to get it well before. You can't wait. You can't wait till the news comes out, because it's well past that point. Sorry, I saw this was an MPW. We're talking about cannabis. Yeah, we just talked about MPW for like 20 minutes. And a lot of people were asking about cannabis. But yeah, I was just talking about MPW. It went up a lot because of Stewart. Stewart may divest its portfolio to United Health, which means United Health may pay all the back rent. So that's why the stock went up. But that's assuming the deal will go through, and assuming United Health will pay their previous debts. So yeah, so it went from 12, and it doesn't look like it ever really came. Wow. So mid 2023 was the bottom, I guess. So it was well under $2. That was in mid 2023. But it's so hard to make money unless you happen to time it like around here. Because if you bought it here, which was still like what, 80% below, like 2 years ago, you would have been down a lot. You would have been down like 70%. Now you would be down like 35%. So it's Florida might get legalized. Florida's not legalized. It doesn't really matter if every state gets legalized. It's if it's illegal on a federal level, the stock will not go up that much. Because there's so many states where it's legal. If you really wanted marijuana, even if you lived in a state where it's illegal, you can just go to a state or ask a friend. So it really has to get approved on a federal level. Because on one hand, like if you got pulled over, if you had marijuana, if you were in California and you had marijuana on you, a cop can arrest you on a federal level, but let you go on a state level, because it's legal on a state level, it's illegal on a federal level. It's just the federal law is above the state law. Laws are very conflicting. That you have federal law, then you have state law, then you have like city law or county law. So you can have laws on different levels, and they might contradict each other. But the federal law of the land is, the law of the land is federal. That supersedes anything. The lack of tax. Federalism, is that the term? What does that mean? The principles of Federalist Party. Yeah, I guess I never heard that term before, but yeah. But a lot of things are conflicting, and it's not like, as long as it's not, an extreme crime. Like obviously you can't murder somebody. That's pretty extreme. But like cannabis, although it's if you have a lot on you, that can be somewhat extreme. But if you have a little on you, you probably won't get in much trouble, even in a state where it's illegal. But so what's cannabis use by country? Is cannabis use in Germany that significant? I bet you they don't even use cannabis that much in Germany. That's why they legalized it. Okay. Germany. So it looks like 7% of Germans use cannabis. Well, Canada, yeah. Canada is cannabis is legal on a federal level in Canada. But Canada, people are just so nice. Like they won't take advantage of things. In the US, we're always looking to screw each other over. That wouldn't happen in Canada. Yeah, so 27%, is this accurate? 27% of the people in Canada use cannabis? Cannabis use. I mean, this is probably people who've used it once. Whenever you look at these stats, you want to look at like how many people use it on a weekly basis. Because if you smoke cigarettes once if you use cannabis once in high school, you're not a cannabis user. And companies don't make money on people who use something once. They make money like if you smoke cigarettes, you want to find someone who smokes at least a pack a week at a minimum. If they smoke like a cigarette once every other week when they go to a bar, like that, they're not going to make any money. They want people who smoke like a pack a day or a pack every other day. According to the most recent data, the number of one country may surprise you, Papua New Guinea. 30% of residents have used cannabis in the previous year. So I've used in the previous year. So it would be good to find out people who use it weekly or daily. Canada's 27%. The US is 22%. But I bet you that the people in the US use cannabis a lot more than most countries. Like I bet you, even though we're 22%, I bet you the average usage is a lot higher, because we go to the extremes in the United States. 2/3 Americans have used cannabis. Well, I wonder what country has heavy cannabis users. Because even if you have 100% of your country using cannabis, it might still be a lot less than the US. Like if the US was 10% of the country, I'm just making it up, but I know it's more, and another country was 100%, we still might use the amount of cannabis, it's just so much more. Countries with the highest cannabis use rates. Maybe they don't have, they don't, maybe they don't break it down by heavy users. Or maybe they have total cannabis use by country. Maybe if we looked at total tobacco use by country, there'd be correlation between tobacco and cannabis use. Top country. Cannabis use. Yeah, I don't think. My best friend's name is Bong Hit, Joey. That's funny. Cryptomaniac. Okay. Wait, do German. So what 4.5 million Germans use cannabis? I think that's what it says. 4.5 million Germans use cannabis. Is that right? That seems low. I bet you more people in California use cannabis. I guarantee more people in California use cannabis than 4.5 million. Because what is that, 50 million people in California? I thought Germany was a big country. $80 million. It's a decent size. The Canadian cannabis market is the legal market, takes the lion's share. You know, there's always going to be an illegal market for anything. Okay. I bet you there's a pretty strong correlation between tobacco use and cannabis use. Heavy smokers by country. Oh yeah, definitely. But alcohol is poison. One glass of alcohol is fine, but once you have like 3, 4, 5, it's just poison. So will Kronos benefit? Well, the stock is up. I mean, it's hardly up. So March 14th, which was 14 days ago. So March 14th, it was $2. Now it's $2.66. So that's 66. $2 to $2.66. Is that 33%? 0.66 over 2? It's a 33% jump. %. So it's a 33% jump. Well, it's a pretty big jump. But you really have to, I mean, you had to get it on the very bottom, which is hard to do. Okay. tons of cannabis. It's almost impossible to find these stats. Portland, yeah, I guess they just don't have these stats. Okay, maybe this is this article. I think some of these articles are just made up so people view it, because it's so hard to find this information. Okay, let's go to number one. I don't understand this. I own MPW. Victor, actually, I made a video on MPW because I saw your video on it. It triggered me to make it. Yeah, I was thinking about buying MPW when it first dropped. The thing is, when a stock goes down, nobody wants to buy it because they think it's going to keep going down. And when it goes up, nobody wants to buy it because, well, usually people want to buy it when it's going up a lot. Well, but if it goes up too much, I don't know. It just, is this MPW? Okay, yeah. So the big drop was, yeah, July 2023. So it was $10 in July. Oh no, the big drop was January 2024. It went from 5 to like 3 something. But yeah, so I guess it's still a good time to buy it. I mean, of course you'd want to buy it when it was $3, but it's still a lot cheaper than it was. I mean, look at it was well over $20 in 2021. So what is it, down like 85%? It's down. I mean, it's not doing that bad. If you bought it 10 years ago, if you bought it 10 years ago, you would have been, if you put $10,000 into it 10 years ago, you would have been close to $30,000 in 2021. But now you'd be negative if you held on to it recently. Of course, you would have gotten your dividend payments. This chart assumes you reinvest the dividends into the stock. If you did not reinvest the dividends, you'd be actually up, because the stock obviously has not done well. Short squeeze. So how many? Does anybody know what website you go to see how many shares are shorted? Look at that. Nearly half the shares on float are shorted. So yeah, this may be a short squeeze. Maybe we should all get together and post on Reddit and apply a short squeeze. There's 586 million shares on float. 200 million are shorted. So I don't know how they do the math on these things, but because 200 over 586 is like, oh yeah, that may be 45. Yeah. 196 over 586. No, it's 33%. Yeah. So how do they? I guess they oh, right here, 33%. I don't know what the 46 is. How do they calculate that? Look at the payout ratio. They pay out 1,000% of their earnings in dividends. If it's over 100%, it's not sustainable. They pay 1,000%, so 10 times their earnings. But this is just a timing thing. They can't keep a 19% dividend out there forever. And they cut their dividend. They cut it. They cut it in half. It was 29 cents. And September 2023, they cut it in half to 15 cents. And it's still a 20% yield. But could you imagine if the stock goes back up, if they bring back their dividend, say the stock goes up to like $15, $20, if they bring back their dividend 29 cents or even more, you would have bought the stock at like $4 or $5. That's your cost basis. And then if they're paying like an annual dividend of $1, your yield is going to be like 20, 30%, maybe 40, 50%. Like Warren Buffett's yield on Coca-Cola is like probably like 5,000% because he bought it for like when you adjust it for stock splits, probably like $1 a share. And every quarter he gets more than that in dividends. What do you want to see, the FFO payout ratio? We would want to see the FFO payout ratio, but I don't think that they list that on Yahoo Finance. We could find that in the because when you look at a REIT, you want to look at the funds from operations because it's net income. Wait, let me make sure I'm not saying it wrong. Of course, I can't find it. Okay, here we go. Okay, yeah, net income plus depreciation and amortization minus the gain on the sale of real estate. Because when a company sells real estate, if they have a big gain, that's really not part of the operational business. So that could really skew the numbers. So you have to strip out those gains because that's not an ongoing thing. You're not going to be selling real estate every quarter and getting these big gains. It's not going to look that great, the funds from operation. I'm looking for the calculation. They should have a calculation. Maybe they do call it NAFFO. Does anybody invest in any REITs? Let me know if you invest in any REITs. Okay, here's the FFO, normalized FFO. This is page 47. Okay, here it is. Here's the page on FFO. So if you want to know what funds from operations is, it's similar to operating cash flow. So if you go to the statement of cash flows, like I usually mention that in every video, the statement of cash flows, operating cash flow is the best indicator of how the company's doing because it converts net income into cash. Because net income is your accounting profit or loss. Operating cash flow is actual cash. But they use for REITs funds from operations because the sale of real estate can really skew the numbers. But you should go through it. We'll go through it right now, but it's good to really understand how they calculate it. So you start with same thing as operating cash flow. You start with your net income or net loss. That's $556 million, a net loss. And then you have to adjust for the non-cash items because the net loss, it includes depreciation because REITs own lots of real estate, right? And real estate is depreciated. Depreciation is a non-cash item because you bought the real estate maybe 5-10 years ago, but you're depreciating it each year. You're spreading the cost of the real estate over like 10-15 years. So we have to add back depreciation because that's not a cash item in this accounting period. It was a cash item when they acquired the asset. That's $676 million. Then we have to add back other non-cash items, like they pass through an impairment, a real estate impairment charge. Maybe the value of one of the properties decreased, the book value, so they pass through an expense on the income statement. But we add it back here. So their funds from operations, the simple funds from operations formula is $287 million. So it sounds like a lot of money, but you should compare it to prior years. Last year was $900 million. So obviously they're doing much, much worse. And I think the main reason is they've taken significant losses on Stewart. And that really brought down their net income. But they call it a normalized funds from operations. So they adjust to $288 million. And the reason they do this is so when they talk about it in the news, like the CEO is on Bloomberg talking about his company, he'll never say the funds from operations. He'll say our normalized funds from operations is $950 million. It just sounds a lot better, right? So they take the $288 million and then they do more adjustments. Now they're adding back the $650 million they wrote off from Stewart. I mean, if they're writing it off, we shouldn't have to add that back. That's a real expense. They're probably never going to get, I guess, unless this current situation where where Stewart is selling their properties to another company, maybe they'll get the rent. But as of when they wrote this 10K, they didn't know that. So just food for thought. Other impairments, $200 million. And then there's these tax rate changes. That's pretty big tax rate changes. Because the income statement calculates taxes differently than the IRS calculates it. I can't remember. Oh, right. It's the IRS depreciates assets on a different way than GAAP depreciates assets. So there's always a tax. The taxes are always off. In the end, over like a 20-year period, it equals out. If you pay more in taxes than IRS or less in taxes in a particular year, it will even out over a long period of time. But from year to year, you'll see these adjustments. So looks pretty good, right? $950 million of normalized funds from operations. This is a REIT. It is a REIT. net loss. So the normalized funds from operations per share is $1.59, which looks a lot more appealing than a loss of 93 cents. But it's good to understand these numbers. I wouldn't just ignore it. I would understand it. But if you really want to get the true measure, this is probably more accurate, 288 million, because this makes sense when you add back the depreciation. I wonder. I want to compare funds from operations to operating cash flow. See how they're different. They should be pretty similar. Okay. So this is the operating cash flow section. Operating cash flow is a traditional it's a GAAP measure. Every company calculates operating cash flow. So they're at 287. That 287 million, and operating cash flow is 505 million. So operating cash flow is actually higher than funds from operations. But normalized funds from operations is a good amount higher than operating cash flow. This is FFO, operating cash flow, normalized FFO. Because you see, operating cash flow, they add back 616 million depreciation, but in FFO it's 676 million depreciation. I don't know why it's different. Yeah, 676. Real estate impairments. Yeah, I don't know. For people in low. See, it's confusing. I mean, I even get really confused with this stuff. Yeah, the more expenses they could pass through, the more it lowers your taxes. So that's why if you're a company like when they said like Amazon only pays 10% in taxes, it's because they have so many expenses that are able to reduce their taxes. So yeah, this is their portfolio. It's worth $18.3 billion, their portfolio. You could see that on their balance sheet if you wanted to know. 439 properties in 9 countries, 43,000 beds. But if you want to go to the source, see that total assets 18.3 billion. Total portfolio 18.3 billion. That's their total assets. That's pretty much their assets. The the value of the properties they own. Like the land is 1.8 billion. The buildings is 10 billion. Then you have mortgage loans. When it says mortgage loans, if it's an asset, it's the loans. They wrote those loans and they're charging interest. So they provided the mortgage loan. They didn't take the loan from the bank. If they took the loan from the bank, it would be in the liability section. And then, so the gross investment in real estate is 14.8 billion, which is the sum of these five numbers, 14.8 billion. But then you have to reduce it by how much you depreciated the asset or amortize the asset. So the net value of their property is 13.4 billion. But they have other investments too. Well, they have cash, 250 million, and then they have, but they have investments in other. They have real estate joint ventures. So they may have, thanks for covering. Yeah, sure. So they may have, there may be another company, another REIT possibly, or just a regular company that's looking to buy real estate, like. So they just went in, it's just a joint venture. Maybe it's 50-50. They own half of the property and another company owns half, or whatever the mix is. But their portion of those ventures is 1.5 billion. And then they have unconsolidated operating entities. So if it's unconsolidated, that just means they own less than 50% of that property. So they don't consolidate all the financials onto theirs. They just put the value into one number and just put it onto the balance sheet. But if they own like 100% of a property, it wouldn't be unconsolidated. You'd see the value of the land of that property, the value of the buildings, how much you depreciated those properties. So it would be consolidated onto there. Okay. The MA hospitals, MA, is that Massachusetts? Is that what you mean? It's 50-50. Okay, so the joint venture is 50-50. But I don't think it has to be 50-50. Does it? It's just some split. It has to be 50-50? In a joint venture, two or more businesses decide to combine their resources in order to fill. Because it could be more than two. There could be like 10 entities that jointly got together. Like when somebody wants to buy a sports team, like a baseball team, a football team, it's so expensive, like $10 billion or $100 billion. So you have to get a bunch of other investors together. I'm just trying to give some context, not saying it has to be. Okay, yeah. Okay, yeah. Because I just got tripped up for a second, but Neil, so when interest rates go down, they print. Yeah, usually when interest rates go down and more debt is used. Okay, well, this is a good stream. I had a lot of activity. I guess I'll sign off. I have to go work somewhere, unfortunately. But yeah, so thanks for tuning in. I'll probably post it tomorrow, the MPT video, after I edit it. So I'll talk to you later. Okay, see ya.